Ashwin, Subhrangshu, hi. Good to have you with us. How have you been?
Hi, Ashu. How are you doing?
Doing very well, Ashwin. Thank you for asking.
Awesome. Long time.
Long time indeed. Um, you know, Subhrangshu, we're having you for the second time, right? You've been somebody who's, done a phenomenal session with us around growth, right? And I think in the context that today we are discussing, right, which is the fintech ecosystem, right? It's great to have the two of you together. I think,
Oh,
COVID
it's
is
my pleasure, and great to be with you once again, Ashu. Thank you for inviting us.
It's a pleasure indeed, right? And I think guys, this session is very interesting in many ways, right? I think one, you've kind of championed the cause of escrow, right, in the country, right? You've really made a very, very quick, fast product, right, which could be adopted by many, many companies that are coming up, right? And I think today companies are operating at a different level, right? The agility that they're operating with, the speed that they require, right? They need faster solutions, right? And you, like I said, right, champion this cause, Ashwin. You've been the architect of this product, right? And you have had a fairly long journey, right? And I'm going to talk more about that. But before we dive into the discussion, I'd love you, the both of you, to take me, through your backgrounds. Ashwin, I'd start with you. Sudhanshu, I'll just come to you.
Sure. I'm as a background, serial entrepreneur with over 20 years of experience, and I've founded many profitable businesses over my career. I have been, a professional in the past in wealth advisory as well as, wealth management. I executed transactions over $2 billion in my career. And, that's when it came to my mind that, is it possible that at some point of time, what you've achieved as, a transaction processing volume over the last 15 years, can you do it in a year? And we're very happy with the fact that this year we are planning to execute business in excess of $1 billion. And next year about 3 billion. So it's been a long journey, but it has been very, very, exciting at every level. And I'm personally, very fascinated by technology. So a couple of years back, I was executing this large land transaction in Mumbai, where the Trump Tower stands today.
Right.
And at that time, the trust deficit was so high between both parties, and these are the largest listed developers in the country today. Right. And they said, well, we can't do it. And one good man, said, let's escrow it. So it was over $500 million transaction. And that's when the escrow started sketching in my mind that why not, only real estate and, why only large clients? Why can't it be brought down to the fact of the common man or the SMBs that struggle to get paid on time? So that's where we, started sketching the model. And post sketching, got in touch with ICICI Bank, signed our first banking partner, ICICI, in 2016, and then started sketching. Now, let me take you back in time when there was no demonetization, no KYC checks. Aadhaar was, government was not sure whether people can store Aadhaar database or not. So we have been struggling those times in terms of compliances together with the bank, and then the trustee piece, and then the gateways. But thanks to the regulatory push by the government, we're very happy that they've stitched the perfect environment for a business like ours in terms of offering solutions which enable trust in businesses and help people get paid on time. So that was the background, and today we are very happy that we serve multiple use cases, multiple clients. So we serve right from emerging digital businesses to mid segment and as well as to enterprise clients today.
Interesting. Ashwin, I'm going to just come to that, right? I mean, a few points that you highlighted, in that introduction, right, were very, very interesting. And I'm going to come to that on the product side of it just a bit, right? But before I do that, Subhrangshu, I'd love to hear from you. I mean, we've known each other for a very long time, right? But I think for in the interest of whoever is going to watch this, right, it's an interesting piece, right? Because it's a very fundamental block that you are working to solve, right? It'll be nice to have a quick round of introduction, because you are solving for a very interesting part. In this environment, right? And of course, we'll talk a little about that, but a quick round of introduction will be helpful.
Sure. Thanks, Ashu. So, as you know, my background, my journey, 25 years in multiple corporate leadership roles, largely centered around sales, marketing, brand management, and strategy. And I've always wanted to kind of do my own thing and, be entrepreneurial in what I do. And when I transitioned from my day job in 2019, as I was always involved with Escrowpay. So my journey with Escrowpay actually can be divided into two parts. So initially, when I met Ashwin, it was almost 4 years ago, when I stepped in as an individual angel investor in this business, because I think what he was building at that point in time, what he was seeking to build, was phenomenal. That's what got me excited personally, and I kind of joined hands. And that was really the passive journey that I had, as I call it, for first 2.5 years. And then, of course, we spoke when I kind of jumped into my entrepreneurial journey. He and I spoke, and I jumped in as an operating partner stroke co-founder. And we're together kind of building something really super cool, very exciting. And as you rightly said, we're actually solving for a very, very, big problem at this point in time, and which is around trust deficit, lack of transparency, in transactions. And more so, I think the problem has become very, very pronounced during the COVID times in the last 1.5 years. Supply chains are breaking down. There is anxiety at large. There are remote transactions which are becoming a reality today. And given that, parties and counterparties are sitting remotely, KYC verification is very important. Trust is not there. So how do you really kind of institutionalize trust? And how do you really pretty much, bring this about in a formal fashion on a platform is what we've done through our digital escrow as a service. And we'll talk more about that. But bottom line, very exciting, a very differentiated space in financial services. I always wanted to get into something which was, as differentiated, as unique as this. And I think, the pieces pretty much, kind of fell in place when I joined as an investor initially. And then, of course, now as a co-founder to Ashwin in terms of building this platform further.
Ashu, he's the guru. He's the guru to the business.
No, I think he's been the guru for, I think, each one of us in his own way, right? And I think no, but I think it's a phenomenon. I usually don't do sessions with with the team together, right? Because it's very difficult to typically navigate and see very clearly through the roles, right? But I think in your case it's very unique, right? And I think both of you have had the opportunity, like I said, of interacting with. And I think both of you have very clearly cut out tasks, right? Ashwin, on one side, where you are really sort of working hard on, on the product side of things, right? And I think Subhrangshu brings in that expertise, right? Which is very required for a financial services ecosystem, right? I think we are a country which has many operational challenges, right? I think trust becomes a very important aspect of, I think, whatever you are kind of doing, right? And then thus it becomes a very exciting conversation, right? Ashwin, I'm going to come to you, right?
Yes.
And talk more about the product, right? Now, when you talk of escrow, right? Escrow has been a very, very traditional product, right? I mean, I started my career as a banker, and I remember of course, we had a very cursory understanding of the product, right? And second, nobody talked about the product, right? Because it was a very cumbersome structure, right, for a financial institution. And typically, when a very large deal would come through, that's when you start talking about escrow, and that was also restricted between just quite a few people within the organization. And I worked with some of the larger organizations, right? Tell me a little more about the product journey, right? Of course, you give me a sense, right, and a direction in terms of why you sort of engaged in it, because you were doing a very large transaction, right? But tell me a little more about the digital play that you built on top of the banking layer, right? Take me through that phase and journey, right?
I think it's a great question, Ashu, and I think it's imperative. Each journey is unique, and how it happened at our end is that I felt that the existing escrow payments technology consisted of actually a patchwork of systems, which was built by banks on outdated infrastructure, right? So everything was manually driven. One needs to, and even till today, I mean, the KYC guidelines or the compliances for the bank are so heavy that even if one needs to open an escrow today, the branch manager would actually meet the person who's opening the escrow physically, verify that all the contracts, all the KYC, everything is in place, and then stamp the document. And as you may be aware that the Indian banking industry is all branch driven, right? So everything goes from the branch to the regional office and then to the head office. So that to and fro time. And escrow is unlike a gateway, where everything is, commoditized in terms of documentation and the payment rails and everything. It's escrow is a custom-based solution, right? Every time a client comes in, you have to customize what he needs and how it is to be done. So I think, we are very fortunate that because we thought, in advance as to how Indian market would be emerging. And based on that, we started the aim of helping businesses grow. So I set out initially, to build a tech platform which was capable of meeting the rapidly evolving needs of today's fast-growing businesses, offering innovative escrow-based payment products. So the idea of building Escrowpay was to actually enable trust in transactions and to democratize right to the to every device in the hands of users. And today we are very proud to announce that we have started issuing the escrow accounts via WhatsApp. That's the latest and by far the biggest innovation or our contribution to the payments ecosystem in the country. And while the product was being built, I think the good part about how our journey evolved is that the first decision was to actually break the effort into two parts. So on one hand, we would build our core platform in the cloud, developing the software systems to collect, execute payments across multiple rails, apply necessary controls for fraud to maintain the data. And on the other hand, we had to build the capabilities we needed to interact with clients, the APIs, files, web interface, etc. So we had a very, very clear vision about how these two pieces would actually interact and how they would work from both our direct clients and from our escrow as a service partnerships. We kept a relentless focus on delivery and on execution. So today we don't work on one product. So escrow as a service is a term which can cater anywhere from one use case to multiple use cases. So we prioritized, digital escrow accounts and expanded our core platform to actually create products that our clients could use while focusing on building digital capabilities. So, if you see most of the websites today are non-transactional. The biggest, when people say it's transactional websites, they just have a gateway attached to it for collections, but you can't pay out. All the websites are for pay in, not for pay out. So what we tried to change was that, our web interface, our APIs, and our ability to interact with clients through files is what we have now built. So we have actually, this obsession on client experience and security, whether it is during onboarding, account opening, payments, regardless of the channel. So we created as I said, when we started out, KYC was a big issue. And then we created a quick and seamless KYC procedure, intuitive user interface, building products that are, very, very simple for clients and can be exceptionally hard. But simplicity is the cornerstone of our product philosophy.
Very interesting. Ashwin, I have, a subset of, this question, right? And I think I'd want you to explain it, through possibly an example or a case study, right? I'd love to understand a little more about the consumer journey, right? So, for example, an enterprise which is to sort of say adopt an escrow solution, right? How would they plug this into their ecosystem, right? Take me through the journey, please.
Well, first step is to when we receive an inquiry, the first step is to understand the requirements. And we have set these protocols, within our system that as soon as, the inquiry comes in, this is the step 1, step 2, and step 3, and so on, because the teams work accordingly. It works like an automated kind of a carousel, right? And every time an inquiry comes in, the requirement gathering is, I believe, the first thing, because as I said, the escrows are to be completely customized, for the requirements of the clients. Even you take any example like NBFC lending, there could be 10 variants of how people want that lending to happen. And that's what we need to customize every time we get an inquiry. And then based on that inquiry, we have a turnaround time of a few hours to come back with a revised flow as to where our role begins. And, just to let you know, and through this, through this interview or this discussion that, every time our role is, put on the flow, it basically grants an access to the client to understand that our role only begins when the payment rails actually bring the funds into the escrow. And then when we settle out as remote settlement of funds happen, at the time of instructions and finally achieving the milestones of every account. So once that is done and once the flow is shared, then obviously, it's very, very easy. We have, a central system for delivering APIs within hours. And then over the last, I would say 12 months, we've reduced our time period of issuance of APIs from as much as, I would say, 15 days to now 15 hours. So the clients are going live faster because of our internal changes that we've done in the tech play. And also the fact that we have standardized most of the operations in terms of delivery of the APIs. And, look at businesses which are new and emerging, look at mid-segment businesses. They don't have time by their side. They need to, have that solution right away, because if we start giving them the pain of, roaming around here and there and talking to the gateway separately, the bank and the trustee piece and all other stakeholders, whether it's internal auditors, external auditors, it's a different ballgame. Then we match and go with the speed of the bank. But we don't want to do that. I think our mode remains speed. And from day one and from the start, as soon as we receive inquiry, we act very, very fast in delivering the right set of APIs and getting client live, as early as possible.
Interesting. Ashwin, I'd love to understand a little more about your banking relationships, right? Because at the end of the day, the transaction that is happening, the settlement that is happening in the banking ecosystem, right? You're essentially a layer sitting on top of it, right? Where you're essentially helping these clients define, their criteria, right? Eventually, once that is firmed up, that the transaction happens, right? Tell me a little more about the banking relationship, right? How has the response been, right? I mean, because, irrespective of whatever sensitivity that you want to operate at the speed that you want to operate at, right? At the end of the day, quality and speed of delivery that you can offer, right, is a function of how agile your partner is, right? I think you started with ICICI, right? And I think now you're in the possibly the process of talking to many other institutional partners, right? Tell me a little more about the banking.
Well, again, it's a pretty interesting question. In 2016, when we were signing up ICICI Bank, in fact, we were knocking on every door of the bank saying that please join us, please join us. And I remember the first day I went to ICICI Bank and discussed about digitizing the escrow piece. They all, they in fact, two things happened. One one thing that they showered me with so much of documentation, acting as a partner to start issuing escrow accounts. And the other thing was, they laughed on us, saying that, boss, what are you trying to do? This will never happen. India as a country, ye kaise karoge, ye kaise hoga type of scenario. So we said, no, we want to continue on our struggle and, create a product that could be used irrespective of the size, irrespective of the age, irrespective of the type of the transaction, and of course, the level of literacy on technology. So keeping that in mind, we went along. And now the situation is that banks reach out to us to say that, well, you're working with so many banks. Is it possible to work and, join the list of banks that are operational? So we currently work with 4 banks, and we have been very cautious in terms of choosing our banking relationships to the extent of, working only with people who are visionaries. There's so a couple of banks that we work with are ICICI Bank, Axis Bank, Yes Bank, and IndusInd Bank. And largely, I would say ICICI Bank, because it's the oldest relationship. We just completed 5 years with them. Most of the business currently goes to them, obviously, because of the fact that they provide us every need. They service all our needs in terms of speed, in terms of documentation. So currently, everything is going very well. But now in the pipeline, which I'm sure Subhrangshu would talk, but the pipeline is pretty healthy. So we are onboarding 15 new banks now in as low as next 18 months.
Very interesting. Ashwin, I'm just going to come to that in a bit, right? And I think, I want to ask, a question to Subhrangshu, right? And which is more to do with, the trust, right? That a brand needs to exude in a market like India, right? Because like I said, right, we have our own internal challenges, right? We are still an economy which is grappling with, basic education, fundamental education, right? And then essentially leads into a very touch and feel environment, which becomes very necessary for people to come in and transact. And thus branch banking, for example, becomes important, right? And I think that was a thesis which was kind of, with which I think it became a key criteria for RBI to ensure that dual commercial banks have certain number of branches, right? They grow at a certain pace and stuff like that, right? But I think digital adoption has kind of changed that. I think today the dynamics are very different, especially in a post-COVID environment. We are moving in a very, very different direction, right? But that said, right? Financial ecosystem requires trust, right? It's very, very important. And like you alluded to, Ashwin, right? Startups weren't, especially fintech startups, weren't being taken very, very seriously, right? So anybody and everybody who started on a 15, 16 sort of an environment, right, had a huge struggle, right, to convince banking partners to come on board, either to lend or escrow-like services to come on board, right? There was a huge question mark, right, in terms of the ability to deliver, and that wasn't a wrong, sign, right? I think it was a concern that they had, right, that will you be able to deliver consistently? And that also reminds me of a conversation that I had with a very senior founder, right, who was wanting to, imbibe a SaaS that one of our startups at a certain point of time was developing, right? And his concern was that, listen, are you guys going to be there the next year, right? What happens to the continuity of business, right? Trust in an environment like that becomes very, very important. So, Raju, you've been a marketing man, right? You've steered some very, very large ships, right? And you understand, institutionalizing many aspects, right? Trust being one of them. How has that been, right? When you were operating in a startup, right? When you're trying to give partners a confidence, saying that, listen, we're here for business, right? This is a long-term play. We understand it far more sharply. We're a tech company. We have aspirations which are that of creating a top-tier organization, right? Which is catering to, say, service A today, but eventually will go out, right? How difficult was that process, right? Given that we are still in I'd call it infancy, right, of where we are. How difficult has that process been?
No, it continues to be difficult, and you're absolutely spot on, because any fiduciary business, any financial services business, actually thrives and grows on trust. And trust is something that you can't really, as I keep saying, trust is something that you can't do chest thumping about. You can't just climb on top of the roof and start saying that, hey guys, come and trust me. You have to prove it. Okay. So I think credentials, track record, consistency, value systems, integrity are very important. So it's all of these things put together where you actually embark on the journey of earning and winning the trust of the customer or your partners.
Right.
And I think we're still in that journey, right? So as Ashwin said, when we first went to an ICICI bank or any bank for that matter 6 years ago or 5 years ago, I mean, it was basically skepticism. It was basically disbelief that, hey guys, come on, we're talking about digitizing escrows. That's not possible. So obviously they didn't trust us. But I think what we've been able to demonstrate and prove to them over the last 6 years that we are in it for good. We are all in this business. We have a track record which has done well. We've managed good businesses. We've managed good clients, and we keep handling transactions day in, day out, right? And also the kind of technology that we've built, the kind of digitization that we've built, the kind of operating protocols we have. I think banks now, from becoming skeptical, are becoming more co-creators in this journey of ours. So a lot of the trust that we are sort of queuing in the market is also being queued in by the partner banks that we have, because banks, whatever said and done, are edifices of trust, right? They're large institutions, and when we and fundamentally that's what we're doing. We are basically creating a over-the-top digital layer on top of the banking system, right? So I think somewhere banks, as part of our ecosystem, as part of our partners who are joined in the hip with us, essentially contribute to the trust that we're seeking to build. But having said that, as a front-end player, as a digital or as a fintech, for us to also queue in trust for our customers is very, very important, right? And we are constantly in that journey, right? Given the fact that we've been in this play for 6 years, and now in the 7th year, I think gives a lot of reassurance to all our new clients, and a lot of positive word of mouth from existing clients. So if you look at our client persistency, some of the clients have been with us for more than 2 years, and obviously they have good things to talk about us. See, the beauty about our solution is that the average lifetime value of the customer is high. It's higher as opposed to any other transactional payment solution. Okay, because it's far more sticky. So when you craft a solution, when you customize a solution, it's there, and it's not that it's not like a typical gateway solution that you are very transactional. So given that the client persistency is high, given that our existing clients are saying good things about us to our new relationships, is something that helps. Given that top bankers are associated with us as our partners and they're joined in the hip, obviously adds to the trust quotient. But more importantly, I think what we've been tirelessly trying to do, and we keep doing that day in, day out, is trying to evangelize the category per se. So when we go out to the market, talk to ecosystem players, when we talk to customers, when we talk to key stakeholders, it's not about trying to tell them who we are and what we do. It's not about narrating only our story. It's about trying to evangelize the category, because given the fact that we are the first players to have actually started escrow as a service, I think that helps. And the journey continues. I mean, there's a significant amount of heavy lifting that we've done over the last 2 to 3 years. But I think thankfully now, because of COVID and also changing macros, the whole narrative around transactions, digital payments, and escrows as a service has changed. And I think we've been, pretty much at the sharp end of the curve in terms of doing what we've been doing. And yes, this journey of earning the trust and winning the trust of the customer and all stakeholders continues. But coming back to the question, is it important? Very important. How difficult or easy it is? Absolutely not easy. Very, very tough. And it just keeps going, and you got to keep going at it every day, day in, day out. And it's a journey. You can't just, have a quick fix solution that, hey, today I spent X number of dollars on marketing and advertising, and you earn the trust of the customer or the stakeholders. It's a journey, and it has to demonstrate it continuously. And I think a significant part of that is also to do with the value systems that we have. I mean, if you look at our people and our stakeholders, when they interact with customers, there's certain operating protocols we have, certain value systems that we have, and we take pride in that. So you have to demonstrate that and keep demonstrating this day in, day out, 24/7.
Very interesting. Subhrangshu, I'd love to understand. I mean, you've given me a brilliant narrative, right, in terms of how important it is, right? I'd love to understand. I mean, given that you've been one of the first entrants in this entire space, right? And like you said, right, I mean, you've been evangelizing the cause of adoption of escrow, right? I'd love to understand a little more about some of the specific things that, for example, you've done, right, around your communications, around your consistency, right, in building this relationship with partners on one end and on industry and adoption and adopters on the other end, right? What are some of the specifics that you think are very critical, right? If you could give out examples, I think one or two.
We've done a lot of content. We've done a lot of content. We've done a lot of white papers. We've done a lot of customer education, right? So even in terms of processes, I mean, typically when you talk to any potential client, customer, or prospect, it's not selling. It's a conversation. and it's consultative selling, right? So as Ashwin said, we actually pretty much act like, a tech fin company of sorts. When a customer walks in, with a query or a requirement, it's not just saying that, guys, this is on the table, this is what it is, this is what it can do for you, this is how it can problem solve. I think the first thing is we get into the shoes of the customer or the prospect. We start by identifying the core problem statement. We start by identifying what is the customer journey of a client's business, right? And how we seamlessly plug ourselves in. So it's actually, again, that whole customer orientation, customer centric thinking, problem solving, solutioning, and then actually working out an optimal customized flow for the customer, right? So I think those are things that we've been doing, which essentially positions us not just as a transactional service provider or enabler, but as a co-creator, as a solutionist. And I think that's also one of our moats, coupled with our agility, becomes a very, very compelling solution for all our potential clients and solutions. And of course, the usual things that we've been doing, talking to a lot of stakeholders, industry forums, industry bodies, and plain brute advertising marketing dollars is something that we've consciously stayed away from. We like to believe that we are a capital efficient platform. We intend staying that way. And we would also want to be, so we're virtually zero CAC today, if you look at us in terms of what we're spending on marketing. But in terms of customer education, reorienting processes, getting into conversations, evangelism, thought leadership, I think those are some of the things that we are focusing on. It's also primarily because we are not yet fully B2C. We are only partially B2C. We are largely B2B2C and B2B. But yeah, I mean, eventually when we get into the B2C game, it is definitely going to be a significant amount of heavy lifting that we need to do in terms of, core marketing processes and core marketing, sort of activities. But as of now, given the fact that we are more enterprise focused, more B2B and B2B2C, it's largely around content, largely around evangelism, largely around thought leadership, working with key stakeholders, industry bodies, PR, and also orienting our entire sales and prospecting processes.
Right. Ashwin, I have a business model question for you. I'll just come to that, right? Before I do that, I would want to understand, Subhrangshu, you've touched upon distribution, right? And distribution is extremely critical, right? I mean, you're talking about a zero CAC environment, which is, I think, I think any business that you talk of, right, B2B environment, right? I think you work on efficient costs, right? But I think, your closure times are, of course, spread out, right, over a period of time, right? I mean, you, of course, have a limitation, right, when it comes to, say, going out, closing many deals, because there is a certain level of physical interaction which is involved, right? So which are the distribution channels that have actually worked for you, right, in that environment? I think that's number one. Number two, what I would want to understand a little bit more about the industry prioritization that you have, in its current form, right? If you could give me a view on that, I think that'll be very, very helpful.
Okay, so I'll have a go at it and then I'll request Ashwin to add. So see, the first one in terms of distribution and go-to-market, I think, look, we're very clear that, there is one which is direct to customer, which happens through our own personal relationships, network, our own BD and alliances team. And these are strategic alliances and partnerships direct to client. The other is what we've very carefully kind of nurtured is that entire joint go-to-market program with other ecosystem players in the payments ecosystem, right? Which is basically our partner banks, right? And our, payment gateway partners and trusteeship partners. So this entire joint go-to-market program that we've launched has been very, very successful for us, because I think that our proposition to our banking partners is that, hey, you know what? Ultimately, we are in it together. We are co-creators. We're solving a genuine customer problem. You guys have distribution. We have the product. We have the ability to solutionize, and we have the agility and speed. So, right? So besides reaching out to the customer directly or prospects directly that we do, as I told you, we also leverage the distribution of the bank and the banking ecosystem to onboard new clients. And likewise, we do similar programs with our, payment players. So, so today you name it, all the big boys in the game who are payment gateways and payment aggregators, they're our partners, and we have joint go-to-market programs with them. So that has immensely helped us in terms of getting into quick scale, reach, width and depth of distribution, right? That's one. Your second question was, what are some of the specific categories or use cases that we are looking at? As you know, originally we started out with real estate as an asset class, but we're very quick to realize that, we can't be a one asset class or a one category focused escrow. So so we quickly transformed being just a prop escrow to a category agnostic play. and category agnostic solutions. Today, we have 4 or 5 pillars which are very critical for us, other than real estate. One is financial services at large. And within financial services, there are various sub-segments which we are fairly active in. So the NBFC play, supply chain financing, unlisted shares and securities, venture investments, revenue-based financing, and so on and so forth, debt settlement. So there are multiple subsections within financial services that we are very active in, which are sweet spots for us. The other is the whole B2B commerce play and supply chain, logistics, trading, and agri-trading per se. And the third is really our, digital first platforms like used auto platforms and so on and so forth. Gaming is a big segment for us. And there's a genuine problem that we are solving. And in a way, and I think, we've actually created, and for obvious reasons, because of client confidentiality reasons, we can't really talk you through some of the details here, officially, but there are a lot of problems that we are solving in gaming, which are pressing problems in the ecosystem. And I think in a way, we were the first sort of enabler in this ecosystem to solve some of those problems, right? So I think what we've done over the last 2 to 3 years is, as I said, from being a one category focused or a limited category focused company, we've quickly pivoted ourselves in the last 2.5 years to being category agnostic in our play. And then, of course, identifying 3 or 4 verticals, which are our sweet spots.
Very interesting. Ashwin, do you want to add to that?
It's just, in fact, Subhrangshu covered all the points, and just to add to the last question on trust, the name of our company is Trust More. So the objective right from the day one, and it's still day one at our business, it is trust more. So people need to trust more when they transact with unknown parties, get themselves verified, sign digital contracts. And now with our new release on WhatsApp, I think it's a pretty exciting time for a country like ours, because every day, any transaction that's upwards of 50,000 rupees requires a level of trust mechanism. And the other thing is that, in terms of experiences that we try to give, in fact, I learned this from one of our mentors, recently, that it's called the Netflix banking, because every time the consumer goes back to the same screen, it tells you what you did the last time. So obviously it saves time, and in a repeat transaction that can be done in a record set of time. So I think these are various experiences that we are trying to add, whether it is the industry, whether it is the client, whether it is the smaller, middle, or a large set of transactions that we do. I think the ecosystem is growing. There is an acute demand in the market, and we are trying to service that through our tech play that we are building. And we are, as a company, innovating practically every day.
Interesting. Ashwin, I'm going to touch upon the business model, right, that you have, in the current setup, right? It becomes important because, when you talk of fintech, fintech ecosystem, right? Typically, it's a technology layer which is getting built on top of, say, traditional banking or NBFC ecosystem that exists in the country, right? I think what it clearly is doing is fast tracking. It's bringing that velocity which is required in transactions, right? By doing certain, we are building certain elements that essentially help reduce the pressure and dependence on the core banking framework, which is there, right? Or core money framework, if I can put it that way, right? More often than not, right, when you actually cut through these models, right, what it seems like is essentially a sales model which is built on top of, that traditional model, right? And it, and a lot of these business models are essentially prone to getting commoditized when it comes to, the possibility of, say, charging a premium, right? What are your thoughts on that, right? Because, at the end of the day, you built a very smart layer on top of a traditional banking ecosystem, right? But when you're operating in a B2B environment, right, any business owner wants to cut down on cost of doing, say, that transaction business, so on and so forth, right? What is the business model in an environment like that, right? This, second question within that one, right, is the LTV, right? Now, escrow is something which is still being adopted, right? It's becoming the new habit, right? We're still not there yet. How do you look at the LTV across, Subhrangshu highlighted some of the industries that you're looking at, right? How do you ensure that there's repeat and there is consistency in that entire play, right, over a period of time? What are some of the things that you're doing to sort of ensure that the LTV is higher, right? Even when you say work on lower costs and making it more efficient, right, for businesses, right? What do you do on the LTV side?
Very deep question, Ashu, I must say. your fascination for financial services is immense. So I think what we essentially are doing at Escrowpay is basically it's like a stitch that we are bringing all the stakeholders and connecting them via technology. whether it is an NBFC, and by the way, as Subhrangshu added that, current focus is on B2B and very slow and small steps into the B2C segment via WhatsApp. But I think largely remaining as B2B and working as a SaaS model, not to, and the SaaS has been building pretty strong, over the last 1 year, I would say. But essentially, whether it is a new bank scenario, whether it is you become a marketing arm for a bank, or you create technologies that can help NBFCs lend better, or in any of the BFSI space, which requires a tech. So I think the current role that we are doing practically is to connect and stitch all of them together to basically, and as you rightly said, create a layer of technology which actually allows their consumers to actually trade in real time. And through a trust, and our role remains as enabler of trust, in every transaction. And then if you see from our lens, and this is an important part that I thought of bringing it today on the conversation, is that, with the enormity of data, which is available on demand in real time now, it is now easier to actually gain insights into consumer emotion. And I think this term of consumer emotion and behavior is pretty important, because every time you analyze the consumer emotion and behavior, we know what our prospective customers truly actually want, in terms of, timelines, in terms of the size, in terms of the speed that they need. And this actually enables them to provide, and, our businesses or our B2B partners, which we onboard as clients, it enables them to provide a gamut of services which are based on personalized requirements. So I think this is a very important segment in terms of the analysis. And then I'd also like to touch the aspect, of the LTV. We believe that today, whether you call it escrow as a service, or you call banking as a service, or any of the terms that are, being coined right now, I think more importantly, if you see the business that we are building, there is a huge cross-selling advantage. So anybody using any of the financial services tomorrow might be able to use any of the other services. Take an example of Gmail, for example, right? You can touch multiple segments from the click of a button. You can access YouTube. You can access so many other things. So I believe we won't let the client go, and whether it is any of our services currently that are live, or the kind of products that our innovation lab is delivering over the next few weeks, I think these are innovations which everybody can use, and we are very excited with the fact that how a tech layer can actually help people transact with security, absolute trust. And the fact that it is not only they're entering into a system not to service or get serviced with one product, but multiple segments which may come to them over a period of time. So I think this is a pretty important layer that we are currently creating. And then binding each of these clients, as I said, with the enormity of data and with the consumer emotion, and sending them the required set of information for the next step in transactions, which could be fairly. So for example, a client has come to us in NBFC or a lending scenario. Tomorrow, there could be a requirement in that segments as well. He could be open to playing gaming, for example, or he might require an escrow to pick up a second-hand car or buy an unlisted share. So I think that cross-selling advantage is a crucial layer that we are currently working on and should be delivered very, very soon.
Interesting. Gentlemen, COVID has been a very, very interesting time, right? It's been a very unreal time. It's touched many of us at a personal level, right? But I think, and from a business ecosystem standpoint, right? I think it's just catapulted us into a very dynamic environment, right? I think, we've seen emergence of companies, categories like D2C, right? For example, Zomato, like IPO, which happened, right? And that's actually gone on to establish the fact that digital is here, right? Something that we would have thought is possibly seen in, say, a 2030 kind of environment, right? We've actually sort of, that's been, we're kind of experiencing in 2020, right? I think, consumer today, at least in the urban setting, right, is very comfortable to deal, not necessarily knowing, the party on the other side, right? Because, there's a brand there which is getting built, so on and so forth, right? But even then, we're an extremely fragmented economy, right? We're still an economy which has many layers, which has many complexities. We have, the social strata is spread out across many, many layers, right? And then it becomes important to have trust, something that we alluded to, right? And of course, Subhrangshu spoke about it in many, in a very detailed way, right? I personally believe that escrow has a huge role to sort of play, right? In an environment like that, right? I mean, you've touched upon, the sectors that you're kind of focusing on, right? Especially in a post-COVID environment, right? Given that we are now here, a lot of digital adoption is happening, a lot of digital consumption is happening, right? What are some of the key areas that you think in the next 1.5, 2 years are going to emerge as solid, strong possibilities, right? Where the need of escrow is going to be well defined. It's going to be very consistent, right? And as a consumer, I might not experience it, right? But it'll come in as a comforting mechanism which exists, right, to ensure that I am feeling comfortable by the end of the transaction. I'm not necessarily struggling in terms of recovery of my payments or whatever, right? What are some of those areas, emerging areas, and what are some of those use cases, for example, right, that you think are going to be very, very clearly defined in next 1.5 to 2 years?
Well, I think starting from COVID-19, I believe that it hit everyone very, very hard. And obviously, businesses were not ready, absolutely. And no one could actually foresee the crisis coming. But we had to tweak our business model as well, because as you know, we started from real estate. We realized that when COVID 1.0 happened, obviously people were not stepping out of homes. Right. If they don't step out, they don't see properties, we can't expect them to buy and use an escrow account. So people were well settled within their homes. Right. But that gave us, time, important time to actually not only introspect, but also kind of make those necessary changes within the COVID period. So COVID 1.0, we introduced digital KYC, smart contracts, e-signing, collection from multiple payment rails, and remote settlement of funds through the escrow. Right. And then came, and fairly, everybody was mentally ready that when the COVID 2.0 comes in or hits us, there would be certain tweakings that are required. So when COVID 2.0 actually became a reality, which was a few months back only, we went a step further, introduced API capabilities, smart dashboards, instant reconciliation. I mean, these are things that helps our businesses to operate at length, on a daily basis, irrespective of the fact whether the COVID is there or not, because it's all tech driven. So that provides a lot of stability. And if you see from our lens, I believe technology is a wraparound of ease and convenience. And today's customers have obviously have reduced attention spans. They're willing to pay more, but provided the services are good and tech enabled. Right. And at Escrowpay, we in fact picked up a very, very huge pain point of opening an escrow account, with banks, which takes typically between 8 to 10 weeks on an average, and is completely manually driven documentation, as I mentioned. But our technology today offers innovation where we open digital accounts in seconds now. Right. And I believe that over the next 12 to 15 months, it will be important to see, whether it is the regulators, whether it is the ecosystem partners, whether it is tech firms, whether they will add a layer of intent protection. Because as per an EY report, 1.8 lakh crore is still stuck in receivables. Right. And that's a pretty, large number for a country like ours. And especially the fact if the SMEs, and, everybody has a habit of delaying, beyond time periods and so on. So I think it's important that the intent protection tool is duly inserted at the time of executing your transaction and, getting paid on time. And that I believe is the biggest system. Regulations or the regulatory departments have done a phenomenal job over the last 2 years. But I believe the intent protection via an escrow account is not only increasing day by day, but a regulatory push in this section to make it, like a no-brainer or like a regulated environment. I mean, imagine what the Honorable Finance Minister, launched last budget when they said that any CSR fund, for example, unused CSR fund should also be parked in the escrow account and not in your current account. That's not your money, right? So she was very clear in terms of, how the escrow mechanism can, end or maybe add a layer of trust in books also, by the way, in balance sheets of large companies. So I think these are certain pushes that are required. And I believe, over the next, I would say 2-year period, I believe technology has to be affordable. So there's no point building technology which cannot be, afforded by people. So right. Technology that is affordable for users, and of course, which is frictionless and seamless in terms of how the UI works, and intuitively analyzing of what the consumer requires. As I said, the consumer emotion is pretty important. Adding all that up, any kind of a financial product, including escrow, works phenomenally well for a country like ours.
Interesting. Ashwin, I'd love to understand a little more about, the current numbers, right? In terms of, how many clients are you doing? Of course, Subhrangshu's highlighted about, the industries that you're kind of touching upon. There are certain industries that you have, and players that you have in the pipeline, right? But, if you could share some numbers, I think that'll be very helpful to understand the pace of adoption, right? The sensitivity with which, especially in a post-COVID environment, right? Many of these players are picking it up as a critical solution, right? Especially in in an environment where there is opacity, right? You're not necessarily very clear who the other person on the other part is, right? And of course, there is, like I said, right? We are through a very critical transitioning phase, right? What have been the numbers like?
So I think, I won't be able to discuss the exact numbers currently, but I think covering us on any metric, whether it is, the number of clients, whether it is the contracted funds through the escrow, whether it is in terms of, what kind of transaction base that we are doing, or innovative products that we've launched. I believe on any metric we are rising, in excess of about 50x, on a regular basis.
Right.
And I think what is more important is that the kind of industries and the kind of solutions that we are building. So one is, to run a business where you create one product and you remain focused on it, and you create and bring any innovation to that particular product only. But I think our key philosophy at our end is, and that's the vision that we require in all the investors that we onboard, because we have raised capital in the past as well, not too much. And being a serial entrepreneur myself, we realized the value of cash. There's no point diluting till the time you're fully validated. And the promoters between me and Subhrangshu are fairly committed to the business in every way, whether it is capital, whether it is time, whether it is whatever it takes to build a successful business. But keeping that in mind, I believe the segments that currently, so we started with one product, but currently have 9 products. And we believe the other 2 or 3 products that are still in our innovation lab would be delivered over the next few weeks. Once those products are out and they are live with people, that's when we raise capital eventually, and then we go out, because that's the kind of philosophy we have, that we need to be creating multiple products and then going after land and expand strategy, that you've been servicing a couple of clients, and then you see what kind of buckets are actually catching up and where you need your focus to be built in, as compared to just focus on one kind of a product. Competition is going on, new entrants are emerging. It's always important that I've always as part of my marketing learning, I've always realized that the innovation is like water, right? It has to find its own way, creating everything new every day. If the newness or the innovation is missing, I don't think the business can survive in future. So keeping that in mind, we are very, very, very happy with what we are doing right now.
I believe calibration is important, right? But I think that's something that I think each one of us agree in our own ways, right? So Raja, I'm going to come to you, right? Bharat, there is a huge conversation going around Bharat, right? And when you talk about, say, SMEs and MSMEs, which is possibly a huge segment, right, which could, which is very relevant from adoption of escrow, right? And they're actually the ones, when Ashwin talks about 1.8 lakh crores of receivables, right, that are there outstanding in the market, right? A large part of it is essentially, these are SME dealings, right? Which have not been paid, and there's absolute craziness around that entire, bucket when you start to sort of dissect it, right? Bharat, like I said, is something which is being talked about, right? And that's largely because, the arbitrage between city and city B, or a tier A town, a tier 2 town has actually gone down, largely because, everybody's been restricted, right? Today, access to information is something which everybody has, right? Technology is become the new normal, right? Everybody's consuming, right? They could possibly be consuming in their own language, but they're essentially consuming the same thing. Something that you also alluded to, that communication has become important, right? For, I think, anybody who's in a B2B environment, right? How do you see this market playing out, right? What are some of the specific things that you are doing to ensure that there is an adoption which happens in these markets, right, as you go along? And like I said, right, the opportunity is next 2.5 years, right? We're going to see massive adoption to happen. That essentially means that you'll have to be working at a frantic pace, right, to ensure that the funnel times are much smaller. It's a quick communication. They can quickly adopt, right? It's a DIY when it gets plugged into their ecosystem. However, right, what are some of the things that you're doing on that front?
Oh, I think great question. So 2 or 3 things. I think, this space is still, the discovery is yet to happen, right? The space is evolving. Escrow as a service is something that we evangelized. We're the first ones to do it. It's a young category. The category is still evolving.
Right.
And I think there's enough headroom and legroom for expansion, growth in the tier 1 cities and the larger cities and larger segments that we briefly talked about, as opposed to Bharat. Bharat, of course, I mean, eventually, if you look at all financial instruments and categories, the way we've grown, whether it is credit cards, wallets, UPI, any payment mechanism, payment apps, I think eventually it has come down to bottom of the pyramid. It has been democratized. And I think escrow as a service will also eventually be democratized over a period of time. But I think one step at a time. But our continuous endeavor has been to simplify the product, de-jargonize it, make it less complex and absolutely easy to use. So I think the first baby steps have been taken by us in that direction, as Ashwin said, in terms of democratization, by bringing it down to the level of WhatsApp. I mean, that's the biggest weapon that you can have today, right? I mean, anybody and everybody's uncle today is using WhatsApp. They're using social media. So the moment you bring it down to a platform like WhatsApp and you are seamlessly integrated with platforms like that, you're automatically democratizing this instrument, democratizing this payment platform. But going forward, I think we want to make it even more simpler, right? And we would want to kind of, completely make it so ubiquitous that, any average Joe can start doing an escrow transaction, and an escrow would really, over the next 5 to 10 years, would essentially become like any other mainstream, payment mechanism on the fly. And I think that's the vision, and that's what we want to create, right? So whether it is somebody in a metro or a big business or a small business or a HNI or a retail customer or somebody who's a bottom of the pyramid sort of a consumer, I think escrow will become the new norm of protecting payments, protecting collections, and also optimizing your transactions. So I think those are the 3 buckets that we see evolving over a period of time. I mean, today, if you look at our offering, we're already there in terms of a classical escrow transaction through our offering or a product, which is the Protect product, right? Where basically there is a buyer, there is a seller, there's a milestone-based transaction, and you're able to close that. So it could either happen through a platform or an enabler, or it could happen peer-to-peer. That product is there. Then we have another product which is essentially around collections, right? So when people want to optimize the collection, rather than collecting into a current account, they collect into an escrow account, and it's seamlessly real-time split, into multiple accounts. So collection and distribution. So that's a collection suite. And the third is around optimization, how escrow can be used as an optimization tool for either as a tax shield, optimizing our business processes. So there are multiple use cases. And currently we are enterprise focused. Currently we are B2B focused. But as we say, we'll keep evolving as a product. The category will keep evolving. And as we keep evolving and growing, we'll do a bunch of things to democratize this payment mechanism. And our view and our, position on this is, over the next 5 to 7 years, this space, this transaction mechanism will become the new normal. I mean, who would have thought that, wallets or even UPI-based payments, etc., will today become a reality. So I think the way the category has grown over the last 2 years, I think we definitely see that it'll, grow at a scorching rate, because the narrative again is becoming very, very, strong around this category. And of course, there are players like us who are there. There are multiple other new startups coming in. There are new players who are getting into this space, which helps the category grow, right? And I think people in the banking ecosystem also started realizing that there is a space, there is a need, there is a wedge, which can be dominated by fintech such as us to democratize escrow as a payment mechanism.
Interesting. Subhrangshu, I have a follow-on question, right? And that question is essentially, we've been talking about, tech, and, we've been talking about, how the distribution can continue to happen in a digital environment, adoption can happen in a digital environment, right? I think, but one thing which is becoming a constant, right, across many, many conversations, I've been having quite a few conversations with fintech entrepreneurs, right, is the need for establishing a physical infrastructure. Now, that is not something which was typically a part of when they started out, right? An urban market setting has been very different, right? The customer has been very clear, it's very identifiable, you can reach out to the customer, so on and so forth, right? But in an environment where, like I said, there's the educational foundation is, say, weaker, it's kind of picking up, it's kind of building up, right? They're not necessarily as savvy when it comes to adoption of newer products, right? Do you think touch and feel is going to become important? Do you think, and this is more a macro question, right? I mean, of course, you can answer it in the context of escrow plus. Do you think? I mean, you've somebody who spent a lot of time, in earlier assignments where you understood the physical distribution aspect of it, right? Do you think that is something which is going to become important to ensure that financial literacy awareness is, it can be spread faster? It will bring in a very different kind of a confidence, right? When people are actually out there to adopt it. Do you think that's something which we're going to see in the times to come?
No, absolutely. So at a very broad level, not really coming down to the escrow level, first, I'll answer it in 2 parts. At the broad level, I think, as you know, this word phygital, this term phygital, is a very sexy word, right? I mean, everybody and anybody was using the word phygital in a very loose sort of a way over the last 5 to 7 years. But I think what COVID has done, and the new normal has done with the pandemic, etc., that phygital actually today is not an option, it's a compulsion. So people who are essentially physical are getting more digital and therefore phygital. People who are digital first are also looking at, physical infrastructure to queue in trust, touch and feel, and so on and so forth. So I think the lines are blurring. And I think eventually the new normal would be to create a phygital infrastructure in the true sense of the term. I mean, there are big boys in the game in e-commerce, for instance, or D2C brands who are largely D2C, but they're also, I mean, there's a big eyewear brand, as you know, who's building a very large physical infrastructure today, right? And why are they doing that? Because physical touch and feel is still very important in India as a market. And if you look at escrows also, I mean, today, look at any other financial product, look at insurance, look at loans, look at investments. While a lot of direct to consumer efforts are, have started there, people are buying insurance digitally and through online channels. But when it comes to actually meeting an advisor face to face, talking to people face to face, at bank branches or anywhere else, they're also buying insurance through those channels. So I think even as we democratize, as escrow becomes more democratized, becomes more mainstream, becomes less complex, I mean, we definitely envision a scenario where, let's say, we would start distributing these products through, maybe physical branches of banks, right? There could be investment advisors. There could be people who are escrow advisors. Or we could actually, we actually 3 years ago had something called escrow trust advisors, who are our channel partners, right? And they still do exist. I mean, for certain asset classes, where we actually created around 1,500 to 2,000 escrow trust advisors who are going out there talking to people, telling people about what escrows are and how this can help, and eventually getting into a conversation to sell escrow as a transaction mechanism. So obviously, when things open up and when we also evolve as a platform, the category expands, we'll probably want to revisit that model and get truly phygital in terms of our distribution and reach, whether directly through our own organic means or through our partner banks and other players in the ecosystem.
Interesting. Gentlemen, we are towards the end of our conversation, right? Last two questions, right? Ashwin, this one is to you. You kind of mentioned, you alluded to, the WhatsApp level play that you, for example, built, right, as a product, right, which essentially means that it's going to be so much more easier for people to adopt, right? What are the next 2 years like, right? At a product level, what are the next 2 years like? You, of course, mentioned a bunch of things. I would want you to give us a sharper, crisper view in terms of what are some of the things that are coming up, right? And of course, aspirations when it comes to adoption in the market, right? What are those aspirations? What are the targets that you've set for yourself? It'll be lovely to understand.
Well, I think I strongly believe that the next 2 years are pretty critical, for the especially the escrow piece, as well as the new layers that are emerging in the payments space itself. But having said that, the reason why we came on WhatsApp is that India has over 390 million, WhatsApp users in the country today. And the reason why we have chosen WhatsApp and not an app is because right from children to senior citizens, whether it is illiterate to scholars, small businesses to enterprise clients, everybody uses WhatsApp. And the reason is that if you use the financial apps and once your requirement is over, you tend to delete those particular apps, right? You don't require them, you get them off your system. But here WhatsApp would always remain. So whether it is a softer nudge to the clients to come back to the platform, as I talked about the Netflix banking scenario, or a scenario where the statements, whether it is transactional, you want to add funds to the escrow, everything is available on WhatsApp. And that's the reason the softer touch that we've built. We've realized that, and that was a research that our firm did over the last 6 years, that, not everybody is capable of doing the web version of the requirement. Not everybody is capable of doing the app version. But WhatsApp is something that, if you make the flow very, very seamless, it can actually be helping anyone and everyone into the ecosystem. And that is what, we've launched now. We'll be making, many changes into the system to make sure that it reaches all segments. And especially when you talk about, the tier 2, tier 3 cities where, it's required that it's in multiple languages. Those kind of systems will be inbuilt as we go along. But I think besides the, WhatsApp launch, we have another product called the Invoice to Cash, which is again, very, very helpful for companies. And this is a supply chain finance solution together with an added layer of an escrow account. So I think keeping those kind of requirements in mind, and as I said, it's all about innovation. If you can add a layer of innovation into a product, it's a likely chance that people will switch on to it because the innovation is solving some additional pain point that people were using earlier, right? So I think keeping that in mind is again important. Then we are building on two special, banking products, which of course too early to talk now. But these banking products would actually make it very, very seamless in terms of, I won't say how bank accounts are opened, but how data is used in terms of your decision making as to how and what you should be doing over the next 6 to 12 months or as you can say that this financial year. So financially is critical in terms of tax filings and everything, and these kind of products that we are making. And you must have seen a new category which says buy now pay later, as they call it, as the BNPL. We are coming up with a modified version of that very soon. So these are a couple of things that the team is currently working on. And as I said, once we release those 3 or 4 innovative items, in the next couple of weeks from our system, we are done with the innovation for this financial year. And then we, go down and make sure that not only that they're live, but also to the extent of, successes appear in certain segments, if not all. And based on that, then obviously we continue to innovate for the next financial year, for which, of course, Subhrangshu and the team are working on certain products in the future. But I think the idea is that digitization is the future. More we make it frictionless for users, more new markets and more new clients will open up. So I think that's the philosophy of our firm right now.
Ashwin, how I want to kind of talk to you more about the product, right? And many features, right? But I think one thing that I kind of understand and I particularly like, right? I think when we talk about product, right, is the way you're cutting it, right? I like that thesis and thought process that you have, right? Where you are identifying each important piece, right? And I think building a solution for that, right? And I think it's I think one thing which is very clear across what you highlighted, what Subhrangshu highlighted, right, is that it's a play which is going to be built with partnership, right? It's going to be built with right partners, and I think that's how you're going to get to strong, relevant solutions for the market, right? And I think so is the case on the distribution side of things, right? Gentlemen, one last question to the both of you, right? And you can choose to answer, with your respective points, right? Is that many startups kind of struggle, right, to balance and manage investor relations, right? And typically when they're in a newer category, right? I mean, this is a fairly new category, right? I mean, Ashwin, you've been a champion of it, right? I mean, you started it even before many people could have thought of doing this, right? Or democratizing the possibility of adopting escrow within their own ecosystems, right? It's not easy, right? India is not a market where, like I said, I mean, the velocity of capital in a business takes a certain amount of time, right? And that's largely because we're not necessarily very extremely transparent ecosystem, right? We operate at many layers. It becomes difficult, right? But I think here you are, you handled your relationships beautifully with your investors, right? And they've actually gone and that confidence is really selected, right, with their follow-on participation, right? What has been the key to ensuring that the confidence is intact, right? They understand the vision, right? And they are in it with you for a long haul, right? What does that say? One or two things that you think are very important to ensure that that the confidence, right, in an early stage startup is intact, right? And the founder gets the space to build what they want to, because here you are, cracking a new category, right? What's been your experience and what will be your advice?
Well, I believe that, to talk about our business first, and I'll answer the second portion of the question. Many independent businesses trust Escrowpay to save them millions in fees and hours, just because we remove the frustration and we make it very, very easy for them and simple for them to accept and remote settle payments.
Right.
Similarly, and that's the beauty about being an entrepreneur all your life, that what you've built is only relationships, right?
Right.
And relationships, when we say it's with every stakeholder in the business, it is important whether you're a bank or whether you are any kind of a service provider or your investors. So investors share a very, very important role in our journey as a business. And why I say that is because I've made it a point from day one that anybody, whoever that investor is, and they've been very gracious with their support, can always directly pick up the phone and speak with me on any length, any time, right? Unless I'm on a call or something, but we can structure that call. But I try to service all investor calls the same day, if not the same hour. Secondly, regular updating investors is pretty critical for every entrepreneur. So whether it is a weekly update, a monthly update, or a fortnightly update, depending on what comfort level the guy has or the business has, because entrepreneurship is fairly very, very difficult, right? You have to manage time in multiple ways. Right. So writing notes for your investors and seeking help or telling them about what you guys are doing in the future has really helped us. And we have done nearly 4 rights issues in our history, right? And whether the amounts were small or large, that is irrespective, but somebody backing us up 4 times, in the same round is pretty interesting. And we are very thankful to all the investors who've contributed and played a vital role in our growth, in the last 6 years. And since we completed our 6 years and the market is fairly ripe, we believe that all the relationships that we currently make, which is either with the bank or the tech play, or in terms of how the product should look like, because each product that we launch in the market is also driven by relationship, as to how the data would be spread out, what kind of reaction the client would get, and what could be his expectation. As Subhrangshu said, we try to step in the shoes of our clients to understand all that activity. It requires a lot of time. Innovation is not easy, and then testing it successfully is a different ball game. And so many investors have tried to reach us, over the last 3 months. Are you raising funds? Let's get on a call. So we as a business, we love to discuss our business. I mean, that's, every time a question comes, let's talk about your business. We're always ready, right? Let's talk about the business. But in terms of fundraising, we are not fundraising right now. So we are waiting for the opportune time. And that opportune time would eventually come in, and then we do a larger raise. Until such time, the promoters are fairly committed, and the investors who are graciously, offering their support to us all the time would go a long way in making our business a success story.
Interesting. Subhrangshu, I have another question, right? And it just came to my mind, right, with that bunch of things that Ashwin said, right? Subhrangshu, there's a new trend that we're seeing, right? I think this is something which is happening. I think with the entire excitement around fintech, right? I mean, this is something that we started to see, right? But I think in the last 1.5 years, we're seeing this, extremely seriously being picked up, right? Where a lot of senior professionals are now moving into newer startups, right? And they are taking up the mantle of being co-founders, co-promoters, right? Being more actively involved, right? That brings in a very different kind of a trust, right? When it comes to investors, right? And that brings in a different kind of a patience, right? Because, an experienced professional would have seen a cyclicity in a business, right? And we've been, as a country, we've been very, we've seen a bunch of cycles, right? There is a certain predictability that is there in our ecosystem, right? But we are still very thin-laid, right? We still to build that depth. I mean, the largest bank in the country, right, out of the 600,000 villages that we have, just still has about 18,000, 19,000 branches, right? And that tells you that, we're very, very extremely understaffed, right? Having a professional like you, right, does that bring in a different kind of a reassurance? What are some of the steps that you think are important to do, right, or undertake as an organization, especially as an early stage startup, right, that could possibly help them, understand the position that you are in a better way, right? But also brings in the confidence that you're in the right direction, right? What are some of those things that you think are important? And how important do you think it's become in today's time, right, to have experienced people come on board and be part of the founding teams that are out there?
That's a question for investors to answer and Ashwin to answer, to be very honest. But honestly, I'm not the right guy to answer that.
No, you're the right guy. You're the right guy.
To answer your question, Ashu, I think, look, between Ashwin and I, we have 50 years of experience,
right.
With all due regards to youngsters and new kids on the block who are, launching some amazing stories and startups. I think we've got some gray hair and we've got some wisdom. So we are hopefully wiser than, most people, because we've kind of, obviously been through multiple business cycles, right?
Right.
I think that's reassuring. So that's another way of building trust. In fact, day before yesterday, we were on a client call, Ashwin and I, and there was a very sensitive discussion around confidentiality clauses, because we were working with some of their competitors. And we said that, look, NDA or no NDA. I mean, NDA is something which is a structural thing that we will do in any case. But given the fact that, we've spent each 25 years plus in the industry, working across multiple business cycles, there is a certain face value and trust that people have in us as brands, as individual brands, right? And we leverage that for the institutional brand, because ultimately it's our integrity, our face, our word, which is on the block. Right? And I think that's very important. In a financial services business, or for that matter, any business, people are very, very important. Right? So if both of us are, sort of spearheading the business and we are the faces of the organization, I think our value systems, what we bring to the table, the reassurance that we bring to the table, translates into sort of institutional trust building as well. Right? Likewise, any early stage business, if they were really to kind of scale up and really build themselves into an institution, they have to start thinking like an institution from day one. And I think thankfully, between the two of us, we've been completely aligned for the last 4-5 years that we have to have our processes, systems, etc., as if we were a 500 people organization.
Right.
the kind of compliances we do, Ashu, the kind of systems and processes we have. I mean, you can proudly say that not too many people in our stage and age have that. In fact, on a lighter note, one of our sort of co-investors and board members actually said that, boss, itna kyun paperwork karte ho? IBM ho kya? But fact of the matter is that that's our intent. I mean, in spirit, in letter, we follow compliances, we follow processes. Because whether you're a 5-member organization, and I've told that to you earlier also, Ashu, if you remember, whether you're a 5-member organization or a 50-member or a 5,000-member organization, your processes have to be bank grade. Your processes have to be A grade. And I think that's what we followed. And for any young startup or any young business, I think the fundamental thing, what we would like to, sort of advise is a very strong word. We would like to submit and, suggest is that while you're building a great product, great, you're doing some cool marketing, that's great. But the best thing that you could do for your business is surround yourself with people who are smarter than you. Surround yourself with a bunch of mentors, advisors, and co-promoters and co-founders who can actually complement your energy, complement your enthusiasm, and have complementary skill sets on the table. That's when the business is there for the long run.
Interesting. Gentlemen, how I want this conversation to go on, and I trust you me, this is something that I'll end up saying by the end of each conversation that I have, right? Because, there are just so many more nuances, right? That you want to sort of, dig into, you want to understand, right? I mean, we're a complex market, right? We don't have a definitive solution. I think the only way you can really sort of, understand our ecosystem and the complexities around ecosystem are, with experience, right? And I think in a post-COVID environment, we're in extremely uncharted territories. We really don't know how the consumer is going to behave. I think the influence has become just so much more dynamic, right? There is little predictability that we have around that, right? So I think when you don't have a very clear picture, right, the only thing that you can depend on is experience, right, and processes, like Subhrangshu highlighted, right. I think one thing that I've been particularly excited about, I have had the opportunity of knowing the both of you, right, at a personal level, and I think one thing that I'm particularly, I have loved, right, is the enthusiasm, right. While of course, it's 50 years of experience, which is not so sexy right now in the current times. But I think it's the enthusiasm with which the both of you are kind of operating and building this business, right? So, Ranchu, you bring in a very different energy, right? I mean, doing those 6, 7, 8 meetings, right? Ashwin, you're working on Sundays, right? It's a combination which can, I think, compete with, I think, any startup of a 23, 24-year-old, right? Which used to be a craze at one more time, right? But
abhi hum jawan hain.
It's been absolutely phenomenal to have the both of you. Thank you so much for taking the time.
Pleasure.
Thank you, Ashu.
Thank you very much. Thank you.
Always a pleasure.
Have a great day. Bye.